Good afternoon and welcome to today's webcast, PCAOB Field Lessons and Year-End Tips for Public Companies. Before we get started, I'm going to play a brief housekeeping video.
Welcome, and thank you for viewing our webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls at the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
Thank you all for joining us today. Our webcast is an interactive presentation, so we'll be taking questions throughout. Please use the raise hand feature at the top right of the media player to ask Jason or Kathy a question. When we can address your question, we will call on you and ask you to unmute yourself. If you would prefer to type in your question, you may do so in the Q&A window beneath the media player. If we can't address your question live, we'll be doing our best to follow up with you after the webcast. And Jason, with that, I'll turn it over to you.
Fantastic and good afternoon, everybody. I think it's afternoon in every single time zone from whence this amazing group of participants is there. My name is Jason Emmons. I'm an IT partner with Moss Adams. I will get into my background in a second, but as is protocol, we always like to do ladies first. So I'm joined today by an esteemed colleague and friend for a number of years who is going to talk a little bit about her background and how she engages with SOX, and then I'll follow her up. So, Ms. Burns, would you like to introduce yourself, please?
Sure. Hi, everybody. I'm Kathy Burns. I've been in this field, in the field of audit and compliance and IT for the past 22 years, actually about when SOX started. I was right in there when that came about, which is very exciting. So to say I'm familiar with it is, yeah, definitely true. I particularly work in identity and access management. I am the access control owner in my company. I'm the person who interfaces with our internal audit teams and or external auditors when necessary or requested, and I'm providing a lot of the evidence that is requested for our ITGCs, or IT general controls. I also have experience with our PCI audits. I work on those as well. Basic overall governance over our access management program. And I do have a little bit of background in risk assessments as well. It's not my particular department now, but with compliance comes risk and all that jazz. So nice to meet everybody. Thank you.
Thank you, Kathy. And Kathy hit it. She's been doing Sarbanes-Oxley for, well, let's just say a couple of decades now, as has yours truly. I've been working on Sarbanes-Oxley projects since 2003. So today we've got the old guard. For those of you born in the 20th century, think of Hal and Oates, Tatum and O'Neill, Sonny and Cher, Milli Vanilli. We're going to pair up an interesting pair today, do something we haven't always done, and riff on the PCAOB, what they're doing, to hopefully give you a little bit of year-end insights and make it fun. Now, when Kathy and I kicked this idea around, I was expecting an audience of maybe one or two, but I think we've got more than 30 people today. That said, we do want to keep it intimate and not necessarily keep the questions to the ones we've got and the content we've got discussed. If you've got a question, like chances are your colleague on the call also has that question. So please ask whatever question you have. You're going to get two perspectives. One from, and I'm going to help Kathy out here, from a large global tech company in multiple countries dealing with all kinds of different systems, different components, different applications, lots of revenue streams. And then yours truly, the classic IT auditor right down the line, password parameters, change control, accuracy and completeness, automated controls, about as boring as watching paint dry. So we're going to mix and match today and try and make it fun, but your questions are going to be that secret sauce that goes on the Big Mac, okay? So we're expecting you guys to be engaged. All right, so thank you for that. We'll get to it. Some learning objectives, they're on the screen. Everybody here is well read, can obviously read this. I'm not going to repeat it. The theme of today, of course, is the grand bargain that Gary Gensler, the SEC chair, has talked about. Gary Gensler often talks about this bargain between raising money in the American capital markets, as long as, the bargain part, as long as you get audited by an auditor that's inspected by the PCAOB. Then that auditor, through those inspections, is going to make sure that all material information gets to the investor, effectively transferring the risk of making that buy or sell decision on the securities, transferring that risk over to the investor. And so today the conversation is really about helping you address those things that the PCAOB regulator is beating up your external auditor for. So if you can get a little transparency into how the PCAOB is operating, hopefully it can make you more competitive in your position. That's the primary goal of today, among others, but that you walk away with at least one idea to make you more competitive in your position. All right. So we're going to talk obviously about those three big areas, to talk about some focus areas around IT dependencies, and then give you some ideas to strengthen your control environment. Chairman Williams of the PCAOB, if you're following the headlines, you're seeing a very interesting fact happen, which is that for Sarbanes-Oxley and the PCAOB auditing standards, which haven't changed effectively since 2007. So this law is now, this regulation rather, is been on the books for about 14 years. But what we've seen in the inspection process in the last 3 years is a complete 180 on inspection findings. For the first 13 years of PCAOB inspections, we saw a downward trend in inspection findings. Starting in 2001, we've seen a complete reversal of that. Inspection findings are up, and the deficiency rates are going up, not just across smaller firms, but the big four as well. So this is absolutely indicates either the inspectors are getting tougher or the talent needs to get smarter. Either way, we're going to try and talk about these two things and really try and up our game, work smarter, not harder, as the PCAOB continues to inspect your auditor a lot more regularly than in years past. At least that's how it feels. So in this quest for getting smarter, another goal here, provide some answers, insights to questions, expectations, share opportunities, developing an approach, obviously, and then obviously try to manage overall costs. An interesting thing that we're also seeing is an increase in the number of material weaknesses. So obviously, while it's great to be more efficient and effective with your Sarbanes-Oxley processes, we are seeing extra costs that some companies are having to deal with as it relates to remediating things. So with that, let's set the stage. Again, classic words, completeness and accuracy, documentation and evidence, and then enhancing that visibility between IT and business process controls. Today, like I said briefly, we're going deep dive on IT. Kathy is absolutely all about IT risk, and then I'm, of course, totally focused on the IT audit aspect. So we're doing a deep dive on IT. Nothing is off limits. Okay, this April 2024 spotlight on common areas of deficiencies. This is more of a rehash of what we've seen. Not a lot is changing from prior years. Still, again, the same thing: completeness and accuracy over reports, the reliance on availability of audit evidence, and then these classic completeness and accuracy controls over data or key reports or IPE used by the control activity owner. And then obviously service organizations for a number of reasons are getting on the spotlight more. Cyber is also a part of that. So how are we evaluating those processes that are going through a service organization? So I want to stop now, and Kathy, want to give you just a chance to react to some of these opening plenary remarks before we get into some real raw tech speak. How have you seen your auditor change its behavior in light of increased PCAOB inspection rigor?
Sure. So obviously our testing has become more intense. So, you know, a lot more testing going on, a lot more maybe even a little less reliance on our internal audit team performing the review of our evidence. So that's come up recently. And, when I ask why, they say the external auditor is being pressed to, do independent testing rather than reliance testing. So that's what I've seen. But, we're kind of ready for anything. As we all know, SOX is a very intricate audit, especially understanding PCI audits. They're not as intricate. So just a lot more
Thank you,
detail.
Kathy, for that. Yeah, no, I'm sorry to interrupt. I was just going to key in off that because we too are getting pressure when we use the work of others. For those of you who are following along with the guidance, AS 2601 has a good discussion. This is PCAOB Audit Standard 2601, has a discussion on using the work of others. And there's a number of specific requirements that the external auditor has to go through in order to use the work of others. And what's happening now, what Kathy just said is quite profound in the fact that the external auditor is using less of the work of others for some root cause. As the guy on the external audit side, what I'm seeing is some of the vendors out there that are providing SOX services and some of the internal audit departments do not have the capacity, the sufficiency of resources, or perhaps they don't have the understanding to create PCAOB work papers that can withstand a PCAOB inspection. So from my perspective, what I'm seeing is a decrease in our ability to use the work of others, primarily because the work is not as comprehensive as we would expect it to be, whereas our PCAOB inspector is going to inspect it to be, and also because the individuals may not have the knowledge. I don't know, Kathy, do those root causes that from what I'm seeing on the external outside resonate at all with what you're seeing from actually being at an issuer?
Yes. I mean, our internal audit departments probably sees that more intricately than I do. They just come and ask me for more evidence or different forms of evidence. And I can deep dive into that later, but an example might be not relying on our, IAM tool reporting, maybe going right to the endpoint reporting. So everything's, I absolutely see that. And I'm sure a lot of people on the call might see that as well.
Fantastic. So let's get into the first segment. We've got 3 segments: automated controls. Arguably a holy grail. If we can get automated controls right, we've got a real opportunity for efficiencies. For those of you new to IT auditing, we've got just a brief summary slide that gives us a high level of what we're talking about with respect to our scoping of controls. If you look over at the right, you're going to see a graphic that helps us scope the automated controls that are relevant to a given process impacting financial reporting, whether that be order to cash or procure to pay or payroll, expenditures, what have you. Once we identify those key accounts, there's going to be obviously some manual controls, there are going to be some reports, and those automated controls. As you can see how this green line is, the effective operation of automated controls really depends on the IT general controls working throughout the entire year. If the IT general controls are operating effectively throughout the entire year, then we can place, we call reliance, or we can conclude that the automated control in the same vein is also operating effectively throughout the entire year. And on the bottom half of the right side of the slide, you're going to see the different risk areas for IT general controls, whether it be access, logical access, change control, big systems development projects like a big implementation for SAP. And then, of course, those operational aspects to it. Interface controls. How do we make sure that the data is going from beginning to end? But scoping in automated controls is key as long as the IT general controls are operating. We'll get into some discussion of what the impact of that is in a little bit, but I want to start with this refresher for those people that might be touching IT audit at the same time. As Kathy and I have been doing this for over 20 years, we're going to try and make this experience like it was the first time, when in fact it may not have been the first time for us. So like the song says, feels like the first time. We're going to try and make it feel just like that first time. Kathy, any thoughts on proper scoping of automated controls before I advance?
Absolutely. I think, as an IT person and compliance person, we're always looking for scoping to be figured out so we can, well prepare our reporting that will be used as audit evidence, and just, be able to create more efficient reports. Maybe new systems are in scope. We have to add them into reports that we generate for user account information or entitlement information or privileged report information. So I'll just say that.
Cool. Love it. Thank you so much, Kathy. Okay, again, what are some classic automated controls that we see? Here we have some examples where they can actually address a relevant financial statement assertion. It can be a calculation, doing accounts payable aging, a bonus calculation, an edit check. It requires a numerical character as opposed to a regular character, a text character, a validation, three-way matches, tolerances. Of course, there's workflow. And then security is also one of these automated controls. And I think, Kathy, you talked about how some of your security controls with respect to segregation of duties are automated. Can you elaborate on perhaps generically how you're doing that? Or if you can, talk about the specific tool that allows you to automate security?
Sure. Great question. Thank you, Jason. So we do have an IAM tool. There are many out there. And what I've been able to do is key in on job titles and, really focus in on, say, administrative roles and or any privilege roles that we have identified in our tool, in our collection of user and role data from our SOCScope systems, and review that report on a regular basis to see if, say, somebody from a development team has access to an administrative function. So reviewing those kind of reports on a weekly basis gives me a heads up if somebody, let's say, got access that I did not particularly review before an auditor catches it during our audit time. So that's just one example of how we use our IAM tool and our DevOps team to help create these reports to just kind of get a leg up on what's happening in the business. Obviously, we can't be involved in everything. So, we need some kind of a review process as such.
Fantastic. Thank you, Kathy. So what's the view from the auditor? When we're doing our walkthroughs, we're going to tackle somebody like Kathy, and we're going to say, okay, when we're walking through a transaction, revenue, payroll, expense, fixed assets, from initiation out to the general ledger, where is that automated control in the process? Is it an inherent control? Is it just part of the ERP? Or is it configured? For example, is it FIFO or LIFO? Is there a FIFO switch or a LIFO switch? Where is that configured and how is that actually controlled? Or perhaps it's a program control. Well, it say, for example, calculates the amount of revenue we can take from the gift card. And perhaps there's some logic and some code behind that. So understanding the nature of the automated control is going to be probably the first line of questioning you're going to get from your external auditor. And then it kind of bleeds into information security, logical security. Who's got access to actually change that configuration? And how can we confirm that application is really covered by some of the IT general controls, including change management and logical security? And if we were to try to overwrite it, change it from the FIFO inventory to the LIFO inventory, or change the authorization approval limits on an expense report or a customer account to allow them to purchase more on credit, how would that be done? Could it be overridden? Obviously, one of the things the auditors are charged to do is actually looking for fraud, and so they'll be trying to poke ways into these automated controls to see if that can actually happen. The other big one is in companies like Kathy's, for example, that are global with multiple business units, different components. Is the automated control set up the same? Is it a way we can we as the auditors test the automated control on a sample basis because it's configured the exact same way across business units? And the other thing to think about, obviously, if it's heterogeneously or different in each business unit, it requires us to test a unique instance of every specific instance. But the other thing to think about is this automated control, for example, for revenue, does it capture one revenue stream or multiple revenue streams? And is the automated control unique for the type of revenue stream or the type of product or service sold going through it? So we have to understand, is it common across business units, and are there unique different types of the major class of transactions, in this case revenue, that require a unique testing? And that would be an example of describing a processing variation of this automated control. But Kathy, what say you? What I know that the auditor doesn't cause you to lose sleep at night, but what do you wake up early in the morning thinking about when you're going into an automated control walkthrough with your external auditor?
Sure. Actually, sometimes I do lose sleep at night, only because there's always surprises out there. Again, as an information security department in a very large global company, it really is not always easy to have your finger on the pulse of everything, although I'm pretty close. having worked in my company for a long time, a lot of people know to come to me for advice, answers, guidance. And that's just something we keep working towards. A lot of times, depending on the information system, the control will vary. So it might not always be the same, which opens us up for a lot more testing. So where we can, we try to pull in information systems to have the same automated control, which we've done for a lot of our systems by pulling them into, for example, an Active Directory that's specific for our SOX and PCI scope systems. It's different than our primary domain. We do, of course, have some legacy systems that might not have been able to be migrated into there, but that really helps, create the same control for all of these systems, say from an authentication basis, because a lot of auditors test on authentication and not deep dive into the authorization unless we're getting into the SOD and least privilege. So, but we do try to manage that in our company from an AD layer. So that's really helped us out.
Fantastic. We're going to extend this conversation on automated controls, given it's the lead off subject. When you think about getting testing, you're going to see your auditor asking for, looking for last modification dates primarily. Can they demonstrate from just by looking at a screenshot if that thing hasn't changed? They're also going to be asking to look for that evidence of the automated control working in a production environment, preferably as opposed to a non-production environment, so that they understand that it's actually happening. Now, obviously, you can't just sometimes create a journal entry in a production environment because that would have downstream financial impact. So it may not always be practical, but the preference would always be to look at a transaction or look at an automated control, rather, how it's working in the actual production environment. There's some examples here. If it's not a production environment, if that's just not practical and you're going to push back on your auditors, hey, you're not looking at production, that's fine. Then here's some ways that we can actually get to the same objective while looking at a non-production environment, specifically confirming that the source code is the same, confirming that the versions of the applications are the same, and of course, making sure that the data, obviously, that's feeding this automated control has been mirrored on both sides. So, just some thoughts, Kathy. Any color you'd like to add?
Absolutely. Our company using this specific Active Directory for our sensitive systems or our scope systems. One of the things we've been relying on in our AD, which our auditors do use for testing a lot, is if there's an AD attribute that lends to helping us out with consistency or putting in this extra information such as modification, maybe when a person was added to a role or a group, that we just have them create some virtual attributes. Our team is tied in with our IT Active Directory team. And we just add that information in, and whether it's, hey, where were the approvals, or what date did this happen? When was this person added, removed? AD has a lot of that information anyway in change history, but we rely on that, and we're really savvy in that way. Or adding a control that takes somebody out of a group if it's temporary access to show modification. Added new access or modification of access or removal of access, date timestamp. I'm a very date timestamp oriented person, obviously from SOX, and I really drive that home to the rest of our team and to our IT administrators or compliance team as well.
Fantastic. And this is a question that just came in from our canned list of questions, which is a friendly reminder that if you've got a real-time question that's up in your head, just drop it in the chat. We're going to address it. But one of our canned questions just came in. If an automated control, like a calculation, is inherent within the system and can't be configured by the issuer, is this a non-key control or a control that doesn't need to be tested because it's inherent in the system? And the answer is absolutely. If we can prove that it's completely part of the system, it's not something that can be changed, it's always going to be there, then yes. How do we prove that? There's things called user manual, the administration manual. Perhaps you call the vendor and say, hey, where is this written down that it just does this? That kind of evidence is great to tell your auditor to bug off, like stop asking about this inherent control that we really can't test because it's inherent to the system. Okay, fantastic. Moving on. One quick story I do want to talk about really is this timing of testing of automated controls. Now, obviously, in light of the hype around making SOX more efficient, more effective, a large number of companies struggle with material weaknesses in internal control, and especially in IT general controls. Very complex area, not a lot of people, not a lot of understanding. So in order to test effectively an automated control, as a reminder, you got to have that sitting on top of effective ITGC controls. So if the issuer is remediating an ITGC control, it makes no sense to test the automated control while the ITGC is broken. That supports, especially if it's a material weakness. Again, the effective operation of that automated control depends on whether or not the ITGCs can be concluded effectively. So if you're looking for a way to be efficient, if you're remediating a material weakness on IT general controls that support automated controls, you can say, hey guys, let's stand down testing these automated controls until we get our ITGC house in order. Kathy, any thoughts on that? I'm sure your issuer may never have had that problem. We know your governance there is really strong by present company. Any thoughts on best strategies to remediate that ITGC material weakness fast?
So obviously you have to make a lot of mistakes to get better. So we've made plenty of mistakes. And sometimes they're not just based on we're not automated. It might be that there's a system that came in and they're not connected to Active Directory. They might have local accounts. We haven't had time to ingest it into our IAM tool. So, it might be that we copy and pasted something in a spreadsheet and something got missed. So, I think our lessons learned are, when we find something out, how fast can that get into our tool? So it's our user access reviews are automated, or any automation, and our internal testing team always needs our AD reports or our workday reports. We use, and we had to run them and provide the screenshot and query and row counts and time and date stamp. We recently automated that, for example, so there's an efficiency and we're not missing information. Those come with validations of a job running successfully. And those are the directions, again, even though I work in a very big old company, it doesn't mean everything's always like up to where it should be, right? It depends on, what other projects are going on. So we're always trying to get there and to make things more efficient and make sure with education as well that our IT administrators are running their systems properly and in compliance.
Love it.
So thanks.
Love it. Thank you, Kathy, very much. As we know, the economic uncertainty out there that we've been in, it's making the M&A market frothy. Whenever the M&A market's frothy, there's a lot of capital sitting on the sidelines wondering where it's going to invest in itself. And clearly, when there are companies that have material weaknesses, somebody's job may be at risk. So addressing that material weakness as quickly as possible, really lowering risk to financial reporting, in this case, lowering IT risk, is a real great way to make yourself a hero to your boss all the way up the finance chain. Here's some example of testing examples of how we would do it for a non-configurable and a configurable automated control, as well as the point on the bottom of the slide, always doing a positive and negative test. I'm going to move through just to get us off the automated control quick, but this is just a friendly reminder that each different class of transactions from automated controls should be tested. I talked briefly previously about different types of revenue transactions and making sure that all the iterations are tested. Okay, there's a lot of talk about benchmarking, and I want to say everybody wants to be more efficient and effective. I think the view from the auditor is that if you're going to use a benchmarking strategy, it may be fine when we think about supporting your 404A assertion. The auditor, on the other hand, may not be so lucky. In recent inspections, the PCAOB is asking us to really go back in time to pull out the effective ITGC operating effectiveness conclusions so that we can demonstrate very clearly how that conclusion hasn't changed, how the logic of the automated control hasn't changed, all the requirements in the standard. The bar effectively is higher. The level of effort your external auditor may have to exert to implement a benchmarking strategy has absolutely gone up, and our inspectors are asking us a ton of questions. So anticipate your external auditor may say, you know what, doing a benchmarking strategy might be fine for management in support of its 404A only assertion, but it's not going to help us pass the muster on 404B. And just as a reminder, you might be thinking, well, gee, Jason, well, how is that? Doesn't management's level of effort have to equate to what the external auditor does? And the quick answer is no. For those students of Sarbanes-Oxley and the Sarbanes-Oxley guidance for management, we know that management may gain assurance that controls are operating effectively simply through the daily interaction of its controls. And that includes things like establishing a benchmarking strategy. So the evidence bar is a lot different for management than it is for the external auditor. So just want to make sure to point that out. Kathy, any comments on the benchmarking strategy before we get on to IPE?
No, not at all. I mean, I think you said it all. I don't have anything extra to add. I'll just wait till we get to the next section. Plenty of content for there.
Cool. Just some opportunities for management. Make sure that when you're testing automated controls that you've got your IT guy and the business process guy from both sides, on the external auditor sides as well as management side. And also always be sure to link it to a particular financial statement assertion in case that automated control is sitting on bad ITGCs or isn't working, that you can start looking for compensating, mitigating business cycle controls and start gathering information around whether or not it's inherent or programmed or configurable. Okay, IPE. This one has gotten lots of attention ever since I think 2015 when Audit Standard, I think it was Audit Standard 8 came out, can't remember exactly which, where the PCAOB discovered that auditors may not be testing the accuracy and completeness of the key reports being used in a business cycle control. And they said, yeah, that's kind of an issue. And it's not just an issue for the auditor, but the auditor should be looking to management to implement controls over the accuracy and completeness of key reports used in the operation of a business cycle control. PCAOB's position was, if there's no controls over the accuracy and completeness of a key report used in a business cycle control, then that business cycle control that uses that report cannot be found or concluded to be effective. So this was their logic, that it was interrelated in the same. It's analogous to automated controls sitting on top of broken ITGCs. The same way for business cycle controls, if you've got key reports or IPE without CNA controls, then that business cycle control by definition can't work. A lot of red meat, but just want to throw that out there. Kathy, how have you seen the evolution of IPE control testing at your issuer?
Okay, so this is something they always want. Anytime we provide a report, and I have trained my team as well to be extremely thorough with providing any report. I always submit the query used to generate the report, the number of rows created if we're running a report out of our tool, as well as the report itself. But I also teach them to review that before they hand it over to the audit team. And one of the other things we do on our team is when we're doing completeness and accuracy, for example, if we've onboarded a new information system and we're checking to make sure we're collecting all the proper users and roles, we test it forward and backward. The auditors want to know, have we collected everything from our endpoint so that we can perform access management or do certification on that data. But I also want to make sure what we have on our system isn't maybe left over and not purged, because if we're using that data for other reports to provide to audit, we want that data to be clean as well. So we try to be extremely thorough with our CNA. I mean, so thorough, and everything on a spreadsheet. I always want a spreadsheet. I want to see calculations. We're just getting into AI, which might come up later, and I can't say I have a lot of experience yet with how can that help us do CNA. We're looking into it, but you can't beat a spreadsheet with a stick. There's math on there, so I do like to see that final number that everything's matching and tying in. So,
excellent, thank you. Just a couple of reminders on the screen. We're looking for completeness and accuracy. And I'm going to jump into one of our canned questions from the studio audience just to kind of mix it up a little. Specifically, if management doesn't maintain evidence, for example, they forgot a screenshot over their CNA procedures, but the auditors can reperform it after the fact, is that sufficient? And the quick answer is absolutely. The amount of evidence that management must collect and retain to support its 404A assertion is very different than what the external auditor can do. As the previous slide showed, the auditor has two options to test for CNA: either test the controls over the data or directly test the data. It's basically recalculating the data, tying out to control totals, independent sources of data, and record counts to make sure that the report really is accurate and complete. Okay. Just moving along here, just this is our view from the auditor for a particular basically testing IPE. You can see the risks along the bottom. Investors do expect the external auditor to understand the source of the data and what algorithms happen to that data on its way to the financial statements. So this is just a typical iteration of what we might see as it relates to how IPE can get modified throughout the process. And we're always trying to make sure that the calculations are correct, that the data extraction is correct, and it wasn't manipulated by a third party at the end of the day. This is one of the reasons why these 4 risks along the bottom, one of the reasons why you probably see your report writer tools getting included in scope. Just when you thought you were done including systems in scope, along comes the report writer, and now that's got to be tested for ITGCs as well. Kathy, any thoughts on this process that the auditors go through to test CNA on IPE?
Absolutely. We sit in a lot of meetings between our auditors, and as a controller, I get in our administrators of these SOX systems. And we do go over these controls. How is data moved from this point to this point? Or is it a duplication if we're testing here or there? Can we reduce testing if it's the same data from here to there and just test the job in between? What are we collecting in our IM tool? I mean, all of the above. So being a controller, you need to be intricately familiar with how your IT systems work. So you're kind of a jack of all trades and master of none, except for the compliance piece.
Fantastic. The view from the auditor, when we look at it, we're obviously, when we do our walkthrough, we're trying to understand the source data, make sure that that's all going in accurately and completely. We'll always want to make sure that it's bolted on with effective ITGCs. If those are broken, then we're automatically in a position where we're going to directly test the data in the key reports. And then every time that IPE is actually used in a control, there should be some sort of validation to make sure that's right. For example, are the date parameters correct? Do we get the right period that we really care about? So just because we've confirmed that the source data and the IT general controls are working, there should be something to make sure that right before you hit that key report production or produce the key report, that you got the right parameters so that it's giving you the right data. So just something to think about as we look at it. Another view from the auditor, we're always trying to understand how the IPE is used in the operation of control. Specifically how it's used to determine the population, and is it produced by the company for audit evidence, or are we testing it through our walkthroughs and operating effectiveness testing? So really just IPE exists in many different forms, including system generated reports, data downloads, and of course worksheets. So definitely quite big. Kathy, other thoughts on IPE?
The only thoughts I have is just make sure it's nice and clean. I always review it before I provide it to our internal audit team. If I feel like there's going to be an issue, I discuss it with my internal audit team before it gets turned over to the external audit team. So this way we can work that out together. One example is I was asked to provide a sample for access control. And I noticed they were testing a read-only role. And I already saw that piece of sample was not going to work out well. There was a approval missing. So I debated that. I go, why are we testing read access? We should be looking at administrative access and write access. So, this is how we, having that relationship with your internal audit team is huge, and discussing, this isn't going to work. I already see the problem that has to get fixed. But in our testing sample, what can we do with that? So, can you bring that back to your team? So, just making sure you have that relationship with your internal team, making sure things are accurate and identifying potential risks before they get out as your sample evidence.
Love it. Love it. As of late, the PCAOB has given us a lot of attention on really testing CNA each time we use that report. And so here on the slide, you're going to see a summary of the different types of key reports that come into question. And assuming you've got the right scope, which is an exercise in itself, an inventory of all your key reports or all your IPE, it then comes down to what are the types of it. And if you look quickly over to the far right, you see we're always asking the question, is it covered by a SOC 1 report, a SOC 1 type 2 report to be specific, or is it covered by change management controls? And is it covered by security controls? These are key issues. And some of the questions that have come in from the ether are really specific to this point, where if it's covered by a SOC 1 report, meaning the report is generated by the service provider, It's not enough to say, well, it comes from the service provider, unless that key report is specifically identified by name or number inside the SOC report. If it doesn't specifically call out the report, if it doesn't specifically call out, if the SOC report doesn't name or identify the IPE that is producing, then the auditor is still going to do something to verify accuracy and completeness in testing the CNA of that key report in the execution of its audit procedures. So if you're facing off against your third-party service provider, ask them to tell their auditor that does the SOC report to specifically identify the key reports that are being produced by the service provider. It'll save everybody a ton of time. So just a pro tip. And on the bottom side, obviously, we're always looking for IT general controls to be implemented, designed, implemented, and operating effectively over the systems that produce key reports. I've seen examples where companies may use a third-party service provider for revenue or inventory, for which a Type 1, a SOC 1 Type 2 was not available. And those companies, unfortunately, oftentimes get material weaknesses unless they send their internal audit out there to test the controls along with their external auditor, or do something to really verify that that the service provider has implemented IT GC control. So one of the questions was here, in order to say a report is covered by a SOC 1, does the SOC 1 need to call out the report by name? The answer is absolutely. Kathy, thoughts on this?
Thoughts on this. So what our team does is we have a checklist before any of our SOX auditing starts. So we're going through these kind of questions, what's covered where, what do we need to know? And we definitely are in communication with our internal audit team to go over these things as well, just so we're all readily prepared to not duplicate the effort, or as you said, it might be covered in a SOC 1 report. So I think that's what goes without saying. We all do that, and if not, I've also heard my internal audit team say, if you have a process about how you validate these items before the audit starts, that's helpful as well. So
perfect, love it, love it, love it. Here's an advanced question that came in from the audience. How can organizations effectively manage the evolving attributes of testing controls and the shifting expectations surrounding IPE during interim and roll forward testing? And I completely agree. It's got to be very frustrating if you're an issuer sometimes, where your auditor comes up with things at the 11th hour and suddenly there's new requests. What is going on? I don't know if you put that question back, but effectively the interim testing hopefully has been done with a full population, an annualized population, such that a conclusion can be rendered on an interim basis, speaking as the auditor, and then at roll forward or some period subsequent to the year-end date, that sufficient inquiries and potentially a sample of 1, 2, or some judgment samples are inspected such that the conclusion rendered at interim can be rolled forward. The original intention of an external audit opinion on SOX controls was not to test controls twice in a year. So the goal is you do a big thrust at interim and then minor update procedures at year end to roll forward that conclusion. So wanted to make sure and clarify that. On the screen, Kathy, we've got some common challenges that the auditor goes through. Besides the ones on the screen, any other challenges that you're seeing your auditor face with IPE?
Yes, that's something we're going through right now during our interim testing, is this, what I mentioned earlier, reliant testing and independent testing. And, really having the those changes, I think that was mentioned before, these shifting changes in program, after we've already provided the evidence and went through maybe a couple hours or put that into our schedule to create the documentation, if they change how they're going to test, we really rely on our internal department to work with the external auditors to either push back or, just not have that happen in the future. We want a clear direction of how it's going to go. Before testing starts. We have, we all have busy jobs, and we can't, just sit and create evidence forever. On the flip side, we understand that might have to happen. So we're always ready with trying to automate how we generate our reports, or how quickly and efficiently we can get that testing evidence out. Because obviously that just might have to happen.
Fantastic. Awesome. Don't need to read the bullets on slide, but here's some common challenges that we are seeing our clients face. Okay, we talked a little bit about that SOC report. Here's some ideas, a specific example of actually including the name and identity of the key reports. Huge time saver. So pro tip in your third party or your vendor risk management folks, if you can get them to persuade your third party to put this kind of level of detail in your SOC report, you can save everybody a ton of time in testing accuracy and completeness over key reports. It's obviously we're spending a lot of time on this, given what's happening. Inspection findings are just revealing one of the most common inspection findings of the PCAOB of external auditors is that they did not test controls over CNA over the IPE or key reports used in the preparation of financial statements. So we're spending this much extra time on it primarily because auditors are just blowing by it. They're not doing it as much as they should. And like I said, the inspection deficiency rates have totally done a 180 on our going in the other direction. So trying to underscore this with all of our teams. Kathy, if you got any service providers, have you seen this level of specificity of key report identification in your SOC reports?
To be honest with you, I don't know. I'm just not as involved in the SOC reports and seeing what our auditors see. I'm completely at the mercy of just our access management control. So I don't want to answer out of turn.
All good, all good.
Yeah,
so here's some opportunities for management, really. Get that inventory of IPE. I cannot believe every year I'm always on a client and lo and behold, in December or January, our audit team discovers 5 new key reports that impact financial reporting. So if you've got people, on your team that can help the auditor get an accurate and complete list of all the key reports, that a key report inventory or an IPE inventory that you're certain is comprehensive, that's a huge way to avoid last-minute fire drills, working late nights, working weekends, helping your auditor get comfort that the accuracy and completeness over these key reports is there. So really, that inventory is key. The other thing is how do reports get changed? Oftentimes, it may be parameters that are, of course, required on a monthly report or a quarterly report. But what if the calculation of a particular field changes? If it's a bonus accrual information, does that ever change? If bonus calculations changed, or depreciation, or any other change to adapt to a changing accounting pronouncement, how does that change happen? Does the person that runs the system just go in and make the change, or does that go through change control? So really ensuring that we've got good change control over that helps out a lot at the end of the day. And really making sure that the control activity owner, that whoever's responsible for operating a control activity that uses an IPE, understands how that IPE is accurate and complete. Kathy, I know we've kind of beat this up, but
that's okay.
Where are you seeing other opportunities for management to really enhance testing of IPE?
Sure. I actually, what you said about the change control, the tool that we're using, our IM tool, we actually have a change history, for example, on reports, and these are reports we're using during audit. So, rather than going into each report and looking at the change history, I had our developers create a change history log that I can easily print out for any of the key reports that we use. And we also use it for change management of our collection of user and role data. So we have that in a conglomerated report for the IT systems that are in scope that are in our tool. So it's just an efficiency piece. And this way we can also easily identify if something's been changed, do we need to go in and do completeness and accuracy review on that system? And again, we work very closely with our auditors to determine what is considered change, what is not, what we feel needs change management, what they say needs change management. So we collaborate with them on that way ahead of time, have it well documented, have a documentation page that both the auditors and ourselves can look at, so we're all on the same page. So
love it.
Helps
Love
a
it.
little bit.
Awesome. Thank you very much. I'm just looking through some of the other questions we got, and I think we're covered most of these, which is good. One question that we did have was our service organizations have pushed back on explicitly calling out all covered reports by name, as that could easily be hundreds of these. How do you think management can address this? Obviously, it's not going to happen overnight. If we can chip away at it, perhaps include 5 this year and maybe 5 more next year. Don't try and eat the whole whale. Eat that whale in small bites, and maybe we can make some progress that way. But completely agree. It's very frustrating. I want to give, because we're on the back stretch. I do want to quickly get to just the recap on ITGCs for management's opportunities. Don't wait. Don't wait until the year end to test ITGCs. This is a huge drama episode. If ITGCs are tested late in the year, if something breaks, it's very hard to find mitigating compensating controls that we can prove things are working throughout the year. So try and get these things tested early. And if they obviously are deemed ineffective, I gave the example of the material weakness earlier, then we're going into direct testing a lot of the key reports. Extra effort, not something we would like to do, but it is absolutely an option. Okay, as we go down the back stretch, we'll finish off with SOC reports. And obviously, there's a couple of reference guidance that I want to encourage everybody to read. Know your guidance, read your guidance, print it out, bookmark it. You got AS 2601 for user auditors, and then as well as Audit Standard 2201, which is all about ICFR. If you can print these out, read them, you're going to be much more equipped to go mano a mano, hand to hand, back and forth with your auditor. The more you can read PCAOB guidance, the better you can face off against your auditor and really help your external auditor be more efficient and more effective. So just as a rule, we always encourage people to read all PCAOB standards that are applicable. Here's just a view from the auditor. Obviously, when you look at a SOC report, what we really care about, obviously can be doing tons of things from payroll to a cloud provider. AWS is a big one, or logistics. I've seen service providers doing revenue. So absolutely, we're in a wave where everything can be thrown up to the cloud soon. If not already, you're going to have a one-man company and they're going to outsource everything to the cloud. And if that one-man company or one-woman company becomes a public issuer, then they're going to have a whole bunch of SOC reports. But it is definitely increasing. And the key aspect of SOC reports is really making sure that the COECs are tested, those complementary user entity controls that are listed in every single SOC report. Those have to be tested for operating effectiveness. But before we get to that, though, there are different SOC reports. The SOC 1 report is for processes impacting financial reporting. You might be thinking, well, hey, I've got this SOC 2 report. Why can't I use that to satisfy my auditors? The problem with the SOC 2 report is that it's usually for operational, other risk areas other than finance. Maybe it's an operational risk, maybe it's a compliance risk, or maybe it's specifically a security risk. So if you're hoping to get your SOC 2 report to give you some coverage, make sure it's addressing some of the classic IT risks related to financial reporting, and that there's controls in there that address that. It certainly may not include some of the key reports that are leveraged. So always get your auditor involved early in the year if you're hoping to pin reliance on a SOC 2 report. The SOC 3 report is really one for everybody. It's basically a way to advertise the controls that an organization has implemented around any aspect they want. There's different criteria, security criteria, operations criteria, change management criteria, but it's really, it's more of a marketing document and not likely to help out. You've got at the bottom, of course, different types, type 1 and type 2. A type 1 SOC report is simply as of a point in time, much like a Sarbanes-Oxley opinion on management. A type 2 is where the controls have been tested throughout the period of intended reliance or throughout the last 12 months. Key distinction, a type 1 report's not going to give us comfort that the controls were operating throughout the year. So you always want to be asking for that type 2 control. All right, Kathy, I know you're not a big SOC guru. I know you don't live in this world that much, but any thoughts on what you're hearing from your external auditors on SOC reports?
Those are conversations I'm just not involved in. Being in such a big company, we're so separated into our little niche of what we do. So they really handled out the internal audit layer. So I've kind of removed from those conversations. I'm just providing our particular controls evidence. So, but one thing I can say is, when we do, anything we do for making things more efficient or more automated, I definitely talk to people in other companies, which a lot of us might do. trying to see how my colleague who left and went into another company, how they're automating controls, how they're handling their reports. And we just kind of riff off each other. How are you doing it over there? This is what we're doing over here. And we get some great ideas from those kind of collaborations. So that's, I can add that last tip in there because I know we're getting close to time.
Love it. No, I think it's great.
Mm-hmm.
We talked about this briefly. If you've got a service provider that doesn't issue a SOC 1 Type 2, get them involved early. Let them know you're sending somebody out to test controls, whether that's your internal audit department or a SOX vendor. There's a ton of those. Let them know that you're coming. Otherwise, we're going to have to find a way such that you can tie every single piece of data that's coming from a report produced by the service provider back to independent sources of data, effectively auditing completely around it. It's a very big bar to do that. A lot of the external auditors may not get comfortable with that approach. So if your service provider is processing transactions that impact financial reporting, get them on the phone early, bring your auditor along and say, hey guys, we got to address this. So if you're not going to buy a SOC 1 Type 2 report, then be prepared that we're going to come to pay you a visit and ask you a ton of questions. Okay, just obviously international standards apply. There are, if you've got global components, there are different standards that do the same thing. ISAE 3402 is the international standards one, but China's got their own, Australia's got their own, Canada, different ways of terming SSA 18 or a SOC 1. We use SOC 1, it's just easier to say than SSA 18. Okay, when we look at the SOC report, we're evaluating obviously coverage, the time frame, whether or not it's qualified or unqualified, whether there's a disclaimer on it, and if it's an adverse opinion, then obviously we move to immediately evaluate it. We look at the types of test procedures performed. Do they include control testing procedures, evidence of inquiry, evidence of inspection of documentation? And then we also look for the listing of complementary user entity controls, which really do need to get tested if we're going to place reliance on the key reports coming out of it. There's also someone once said, when you have a sub-service provider from your service provider, does the sub-service provider have a SOC 1 Type 2? This has come up a lot with PCAOB when the sub-service provider has a cyber breach. The PCAOB is very interested in what management did if the sub-service provider of the service provider had a cyber breach. So the PCAOB is asking lots and lots of questions. So when you get your SOC report, be sure to read it to make sure that if there is a relevant sub-service provider, that you grab the SOC 1 Type 2 report. And I know what a lot of you are thinking. You're saying, but Jason, it's turtles all the way down. What if the sub-service provider has another sub-service provider and they've got a sub-service provider? So effectively, I think once you get past the primary service provider to the sub-service provider, you're probably good. It's easy to make the argument that the proximity of the sub-service provider is so great to your 10K that the risk is extremely low and you can pass further review. Okay, there's obviously the carve-out method, inclusive. Some management opportunities to be efficient. Use a template really to ensure all the components of the SOC report are reviewed and documented by management. Saves your auditor a ton of time if they're having to do this for themselves. We talked about the COECs. Somebody in management should be doing this mapping so that your auditor can just come in, grab your list of COECs, and then quickly map that to the control activities you've got so that they can conduct operating effectiveness testing. Here's a template, a brief example of how to do that mapping. The first question is this COEC even relevant to the company? Because oftentimes the service auditor that prepares the SOC report may just throw everything in the kitchen sink on it. Some things may not be relevant, and obviously that's a time saver if you've got that. This is just an example of how to map it. And a couple more opportunities with some making sure that SOC report's actually been evaluated for any deficiencies that come into it. And we are at about 60 seconds. So got our contact information. I want to thank Kathy Burns, a staff security analyst, for playing for the last hour in doing a back and forth on what to expect PCAOB IT inspection findings. And Kathy, final words, thoughts. What's one takeaway you hope the audience has as they go off on their merry way into year end?
Sure. I think the best takeaway is having people who really understand all these controls having your internal audit team just completely familiar with all this information so they can really work with your external auditors carefully and make sure there's no duplication of effort or using SOC 1 reports and having your control owners just be extremely organized as well, and having, their checks and everything automated as possible.
Love it. Thank you, Kathy. And now, Emily, I'd like to turn it back to you so you can close us out.
All right. Thank you both for a great presentation today. If you still have questions for Kathy or Jason, their contact information is on the screen now. And here is a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey, as your feedback is very important to us. And thank you all for joining, and we hope you'll join us again next time.
Thanks, everybody.